And how do you make that decision? Because I feel there's a lot of FOMO involved.
The way you solve for this, which it's easier said than done, is just working on like the trusting your partners, and sometimes be able to say, okay, I don't see what you're seeing, but I trust you.
How you do in order to get the best entrepreneurs in front of you?
Well, something I try to tell myself every day is like, okay, every year in SF, there are probably just 20 companies that matter. I would say that whenever we all agree, we get a little nervous.
No, so thank you so much for joining us, Anna.
Thanks for having me.
Yeah, it's super exciting for us. I think 1 year ago, talking to someone like you would have been like, maybe not impossible, but it would have been like, wow, and still is wow, but we're so happy to be doing this. And yeah, so maybe we wanted to start a little bit by talking about how a Spanish girl like you ended up being an investor in one of the biggest funds in the world in San Francisco. Maybe you can tell us a bit about what you did before joining NFX.
Yeah, totally. I think it was a very unlikely outcome. Honestly, it was not part of a big plan. It kind of there were a few things that brought me here. But yeah, I mean, growing up, even in college, I didn't know what VC was.
What did you study?
I studied business and law. This. I mean, it's very common. Well,
in Spain, right?
Spain is the thing. I think in the US it's a bit weird because actually in the US you need to do another type of major to be able to do law or to be able to do business. It cannot be your undergrad, but there's a tangent. But yeah, I studied that. I think the last years of college, I got in touch with this world of startup and entrepreneurship, and I became really fascinated by it. I think my first contact with it was really Airbnb, which is fun to say. I love traveling, and even in college, I studied abroad many years, and I found Airbnb very early on. I think it was 2007, around that time. I think it was a few years after they were started. And I was fascinated. I started to study it super deeply, how it worked, even looking at the terms and conditions. And I was like, wow, this is mind-blowing. To the point that with some friends in college, I tried to start a similar company to Airbnb just for exchange students.
Nice.
Because, I mean, that's something that we had dealt with. Literally, when I studied abroad, you had to, I remember having to call, look at the newspaper and having to call. We tried that. It didn't work. And I realized how much there was to learn about how to build a company like that. So I ended up going, instead of looking for what was a normal job at the time, I was I want to see which startups exist in Barcelona. I was living there at the time. And I ended up joining a gaming company called Akamon. Mm-hmm. There, I was there for a while. And then it was also around the time that Amazon was kind of starting in Spain, and I got to join them on their marketplace team.
To where?
I moved to Madrid to join Amazon.
Okay.
I was part of I was one of the few people, first people in the marketplace team there. I think we were 100 people in Spain.
When was this? 10 years ago?
2013. Yeah, 2013.
I met this really interesting girl the other day that started also in Amazon. And she's building a startup now.
What's her name?
Oh my God. I'm getting blank, but the startup is called Wise Look.
Wise Look.
And I don't know. She has a investment banking background. She built the sports division in Amazon. Maybe you know her.
Maybe she was from retail. We were marketplace and retail. Mm-hmm. I think I would know about this startup for sure if she had been from the marketplace team. Yeah.
I will remember at some point. I will let you know.
So you were working at the marketplace division?
I was on the marketplace division.
This is related to what you do now.
Yeah, actually, yeah. Funny enough, yeah. And then I was there for close to 4 years. And then the fact of being there really opened the doors to coming to the US because I happened to I happened to work with people that had studied here at Stanford. So I got to learn about their experiences there. And then eventually I got excited about trying to come here as well. So in 2013, I got accepted into the Stanford MBA, and that's how I moved to the US initially.
Why an MBA? Do you have family members that did an MBA?
No, not really. No.
So you were like researching? What
it was honestly, I think if I had not joined Amazon and I had not worked with these people, probably it wouldn't have been something that I would have considered. Like it was, that's why I say like a lot of things were part of like, you know, coincidences and then like being able to chase it, like chase the opportunity when it came. But it was like through working with these people, I was like, wow, I really like working with these people, and they shared a little bit like what they had done before, and
was it also like a way of being able to work in the US, getting an MBA?
It's a way. It's a way of, I mean, in particular, in my case, I had always been very interested about entrepreneurship, and I was kind of like on this path of tech entrepreneurship. And really, it's not that I wanted to do an MBA in general. To be honest, I just wanted to go to Stanford. Like honestly, if it would have been another one, I might not have made the decision. It felt like a very big decision at the time, like just how much it costs.
Yeah, exactly. And it's also a big cost of opportunity of while you're studying, you're not working.
Exactly. Like I really, I mean, I was really enjoying my time at Amazon, and Amazon wasn't at a very interesting moment at that time. But yeah, I think I told myself, if I'm able to get into Stanford, I will go. But I'm not.
Was it worth it?
I think it was worth it. And honestly, like, even when I got in, it was still like, it took me a while to really make the decision. And there was when also like these people that I had worked with were very helpful in helping me understand. It feels like a lot of money right now. It feels like a big opportunity cost, but actually, you know, like the doors that open and everything. And honestly, it's been, I mean, it changed my life to do this. It's not that I'm blindly recommended it to everyone, but for what I specifically wanted to do, and given my passion about tech and entrepreneurship, it was like the right call for sure. Yeah,
it's a place to be, you know, if you're a student, or just, you know, it's where everything is happening. You're surrounded, like you're in Stanford, and next to it, it's Menlo Park with all the huge VCs and the Steve Jobs house, and and I can imagine like the teachers must be all like founders, investors, entrepreneurs.
I think that actually venture capital, as the model that we know now, started as started in Stanford. Like some professors started to fund students. And that's how the model.
It's very common there, like for professors to invest in the students. And I mean, there are a lot of classes about VC. And for me, like the biggest thing, honestly, like the biggest realization or the biggest value that it had was like really changing my mind to what's really possible. Like it really expanded, you know, like the realm of like the mental limits. And a way that this happens, I mean, there's a part that is like culture, like, and you guys also know this, spending time here, like how people think about stuff is very different. But also like another big thing for me was like, we were having all these people coming to campus and hang out with us, you know, like very impressive people, like famous, you know, like founders, VCs, and it's people that you normally, like, they're like actors for you. But then suddenly they're in a class with you and they're so chill. And
they're normal people.
And you see them as normal people. Like, honestly, like, something that I thought many times is like, I think I've studied and like, I mean, I have family members that are really smart and so on. And I'm always like, what would have happened if this same person was born in Palo Alto? You know what I mean? Like, it's people that maybe like in Spain, they're doing well. But you are able to see the power of an environment. Like it's massive, because I was seeing these people, and it's not to say that they're not impressive people, but it's like they are both impressive people in the right place at the right time, and that's very liberating in terms of, I don't know, like the confidence that it gives you to try things and like aim really high, you know.
And I think it still feels like that. Like whenever we come here, in 1 week, our mind shifts a lot, and then when you go back to Spain, your mind starts going back to the old ways of thinking. Like here, it feels like everything is possible.
Totally.
And people are thinking that way. And so the limits that you set, you know, in your mind for yourself.
And it's like you discover opportunities that you didn't even think that existed before coming here.
Yeah, honestly, like the power of role models, like it's something that is discussed a lot, but it's so real. Like, how are you going to imagine something that you have not seen? You know what I mean? It's like, you have to see these things to be able to say, I mean, if this person has done it, I can also do it. I honestly, like, I always knew that at some point I wanted to start a company. Like my family, like they're all entrepreneurs, not tech entrepreneurs, but it's like a very entrepreneurial family. Like they're not employed like by anyone, like my mom, my dad, my grandparents. So I was like, this is actually like the path for me at some point, and maybe tech is like the new way. But I always thought like, oh, I need to learn so much, I need to go to Stanford and learn these things and work at one. And then you go to Stanford and people are like, no, like you do it now, like.
You're prepared, no?
Yeah, people are like, I was meeting my classmates and everyone was like pitching these big ideas. And I felt like in Spain, I was almost like embarraed to recognize that I had these aspirations, you know what I mean?
Yeah, it's easy to feel the imposter syndrome.
Yeah. I think it's changing
it's
though.
Cultural also, like in Spain, I think it feels bad to want big things.
Totally, yeah.
It's kind of like bad, like you're a bad person.
Yeah.
Big things.
Yeah, honestly, that's one of the things that concern me the most.
Yeah. And what do your family think about you now? Like, because they must, like, if they don't come from tech, and obviously, like, Spain is so different, like, the things that you tell them about, hey, like, we invested in this company, like, millions, whatever, don't they, like, say, like, what?
Yeah. It's very surprising. It's very surprising to them. Yeah. I mean, this is like a funny thing, but my dad is always like, do you think NFX would like to invest in this thing that I'm doing? And I'm like, no. I'm like, we're doing like completely different things, That's not, I literally once I have to explain what network effects were,
Yeah.
And like, we're looking for businesses that have this sort of thing, But they're like, wow, what's going on over there, Like these people are crazy.
That's right.
So what happened after doing the MBA?
So where I was getting to with this was that unexpectedly, it was not my plan, but like the first quarter of the MBA, I ended up meeting who became later my one of my co-founders. So I started a company during the MBA.
Okay.
So when we graduated, that's what we set out to do. Actually, we went, like, we did YC that summer. Nice. So I'm a summer 19 alum.
How big were the batches of Y Combinator by that time?
Honestly, I think there were around 100 people.
Per batch?
Per batch. Yeah, but there were like just 2 batches a year. Mm-hmm. Yeah. It was the time that was starting to get a little bigger. Yeah. Mm-hmm. And then NFX, like the story with NFX starts by NFX investing in our first round. So like...
Just after the batch of YC.
Or before. Yeah, I think like a few weeks before the MBA.
So you were one of the...
my company is a portfolio company of this fund. So that's what I did. Like I was with the company for a few years. I don't need to get into details of what we were doing, what we're doing right now. But long story short, like we were doing something that was impacted by COVID a lot. Mm-hmm. Like we started summer 19. And then, COVID was like 2020. We had to pivot a lot. And at some point, like what we started with and what ended up becoming was very different. And I decided that I wanted to do something else. And then I was kind of like in between things, thinking about, I thought I was going to start another company. And then NFX was like, why don't you come, try VC. I had always been very curious about VC. And then I joined and I ended up loving what I'm doing. And now I think that's what I want to do. For the rest of your life is a little like a strong statement, but
it feels like venture capital is like an end of career job, right?
It feels like that.
You don't know what is after venture capital.
Yeah, that's true. Yeah, I mean, you guys probably feel the same, but it was the first time that I was like, wow, this is actually something that I can see myself doing forever, in the sense that the learning curve is so, so steep, and there's so many things to learn. I think you learn like 80% of it like your first or 2 years. You can actually speed that up a lot, but the remaining 20%, it can be like a life. I mean, to be able to be good at this is such a challenge. Yeah. That I don't know. It's a challenge that I really like. It's like something that you can say, I'm going to dedicate my life to be the best at this. You
need a lifetime to be really good at this, because you need to do a lot of investments, and investments need time.
Totally. So just like feedback loops and
And also you need to be always like learning about new technologies and new stuff to be able to invest in them.
Yeah, and I always say, so I started doing VC beginning of 2022. And it was kind of like, we were like at the end of like the super bubble of like 2021. So when I joined, like everything felt like the pace was super fast, blah, blah. Then like a few months after, complete market crash. So suddenly like a different dynamic in VC. And then like a few months like this, and suddenly AI came, and now it's like another bubble, but just only with AI, like completely different technologies that you have to learn about. So on one hand, it's very changing, and it can be very different to do VC at one period of time than another. And on the other hand, there are so many other things to learn. Like it's just like psychology also at the heart of it, especially when you do see it, and that's a lifelong thing to master and understand. So
can you, like, for the founders that might be listening, can you explain, the basics of VC? Like maybe some people listening are just like first-time founders, and like maybe they have like, because I think this happens to us a lot. Like we are so used to it because we basically live in it like all day, and we feel that the basic stuff is so basic. But for so many people, maybe they don't understand how it works.
Yeah. No, happy to. And you mean like the business of VC?
Yes.
Right? Yeah, I mean, at the end of the day, a venture capital firm is another business. And I guess, I mean, simplifying, I think a VC, how it works is like, normally they're like partners that are managing the firm, and then they go on to raise money. Like, so VCs also have to raise money. They go on to raise money from LPs. There are many different types of LPs. Maybe that's not super relevant, but it can be like from institutions to, just rich people.
LPs are basically the ones that give money to VCs, exactly. No? Investors in VCs.
So you as a VC need to have like a strategy and a pitch, like you need to put together like a deck literally to pitch like what's your advantage, like what is going to be your strategy, the type of companies that you're going to invest in. And then you go and find people that want to invest in that vision. And then normally like within a VC, there are different funds. So you normally do this from time to time. So you raise a fund, you deploy it, and then you go and raise another fund. And then how it works, like the deal with those LPs normally is, so I'll invest your money, and then I'm going to get like 20% of the returns of that money invested, normally after having given you back like the money that you invested. And then in exchange as well, to be able to run these operations, I'm going to get like a management fee, which basically is going to be able to pay for like the salaries and basically fund the operation. So that's on one hand, like of what a VC needs to do. Like first is like raising the money to be able to invest in companies. And then the other side, which is more like, I guess, like the more visible part of VC is then you go and find like the opportunities where you want to invest that money that you have raised. And like you have to find the opportunities. Like, so there are different jobs there. Like we divide them in seeing, like you want to see the opportunities, then you want to analyze and pick the opportunities that you want to invest in. Then you have to like help those opportunities, support like that portfolio, and eventually you have to exit that portfolio. So it's kind of like 4 different jobs. And
it's a 10-year roadmap.
Exactly. Normally, like in terms of like deployment phase, it can be shorter. It's kind of, and by deployment means like finishing the money that you had raised to invest. But then like from deploying to exit that company, from the first job of seeing and then investing to exiting the company, it could be 10 years or more. And then the other thing that is very particular to VC, that it's like very specific to VC, is that usually like in a fund, I mean, this is venture capital for a reason. It's a very risky asset, and normally out of all the investments that you make, only 1 or 2 per fund like do exceptionally well and pays for like the losses or like the other companies that maybe just returned the money. So it's like it's a game of like outliers really. So you always need to be investing with the idea of like, if this business go well, can it like not only return the fund, but like multiple times the fund, so that so that we're successful at our job, which is like multiplying the money of the people that gave the money to us. And and then like I think there are many types of VCs. Obviously, like there's like the stages is a way to make, like differentiate VCs. It's not the same to be investing in seed than in growth. Seed or Series C plus. there are also many strategies within VC. Like some VCs are more like, I have a concentrated portfolio and I really double down and I try to have a lot of ownership of a few companies. There are other VCs that are like, I have a massive portfolio. Like I just have like a ton of positions in many companies and I don't spend a lot of time per company. There are many different constructions.
What's the difference between those two? Because like, thinking as like the VC as the outlier game, what we talk about all the time is the power law, no? Like, and for us, we treat the power law, or are we thinking about the power law as the more bets that I can do, the more optionality that I have for one of those bets to do like 1,000x, no? But also like the more bets that you do, you can lose the more money, you know?
Yeah.
So,
and it's more difficult to help them. Like you dilute your value.
Yeah.
Yeah, and also like the one, like this, the ticket is smaller, so the one that does really well is going to give you less money, no? So on the other side, like being really, you know, like conviction based and thinking this is the biggest opportunity ever can drive like huge returns, but it's so much riskier, no?
Yeah, it's hard. There's not a right answer because it's like, it's uncertain by design. You know, if you knew like, if you were able to say exactly how many outliers are gonna come up, then it will be like a math problem. But yeah, I think like you were right. Like I guess the benefits of having more of a concentrated portfolio, say like, I don't know, you have 50 companies and you have 15% in each of them at exit. It means that probably, you know, at exit of a very big company with you owning 15%, you can return a lot of money. But maybe you given that the portfolio is 50, maybe you just hit one outlier. If the portfolio is 200, maybe, you know. But then like I guess like the failure mode is like if you have a portfolio of 200 and you only have one outlier, but you have, I don't know, 1% of that company. Maybe you're not able to return.
And what is the strategy of NFX, the fund you work for?
We're more on the camp of, I mean, and then I guess like the strategies are also usually determined by what the strengths of the people running a fund are. We are all like at NFX, we're all ex-founders, so we do see a lot of we see ourselves as adding a lot of value on the helping side of things. So if you see that as being your thing, that also determines like what your strategy is, right? Because to your point, like if you are working with 200 companies, you are not going to be able to put this strength at play. So we're more on the camp of like, we have a big portfolio because it's a big fund for a seed stage, but probably each fund is like 70 companies. And then we try to, you know, have a meaningful stake in all of them that aligns incentives in the sense of like, it's big enough so that we can actually put our time into helping those companies. Also, it's because what we like to do. I think there are other investors that's not what they like to do. So yeah, our strategy is like a smallish portfolio with positions and then doubling down. Like we reserve normally 50 to 40% of our funds to just doubling down on the companies that over time show that can be those winners.
So you can invest again in the following round.
Yeah, we do that a lot. You know, like we invest at the beginning, you know.
How important is that to be able to get good returns?
I think that is super important. And sometimes it's one of the hardest things to do. Because you would assume like, oh, once you already are working with a company, it's already... you have much more information than when you're like just deciding to invest. But sometimes, you know, sometimes it's not obvious after like a long time. Sometimes companies are successful because suddenly the market changes in a certain way. And they're just like lucky, you know. But I mean, I would say it's a little simpler than just investing from zero. But it's not that as obvious as it seems. And it's crucial because it depends. Like it basically like determines like what you end up owning of the winners. And imagine like one of the winners is a company that you decided not to follow on or something. That would be like a multi-million-dollar mistake, you know?
Yeah, it's hard also because you are paying normally more money 2 years after doing your first investment. You pay more money for less percentage of it.
That's
so it's like you are kind of biased that I pay, imagine like 10 million for 15% and now I need to pay 10 million for 1/3 of it, no?
Yeah.
And it's also bad for the maths of the
Exactly.
returns of the fund.
It's hard because it's like other level of checks for
And how do you make that decision? Because I feel there's a lot of FOMO involved, no? Like,
fear of missing out.
Like it's the same thing that we talk, like optionality. Going, like following on gives you optionality, but still you can lose the money. So I think it's such a tough decision.
Yeah. I think like we try to be a little, I mean, it's a mix of like, normally there's one partner that is closest to the investment, and that the opinion of that partner matters a lot, which at the end is like the insider. But we also try to involve other people in the team to like when we need to make these decisions to give like a new perspective and almost evaluate the investment as they were neutral. And then there are other things that matter, right? Like the numbers, like that they were able to achieve, how well the team is operating, and then also like who are the follow-on investors? Are these people that we,
that we know, that we trust?
That we trust. So
do you need a lead investor for?
Normally,
the
yes.
round?
Normally, sometimes sometimes like we invest in a company, and I mean, there's this thing of, I mean, I think the best place to invest is like you invest in something that at the time you invest is contrarian, and then suddenly it becomes consensus later.
Yeah.
Sometimes that consensus comes later than you expected, and in that period you might need to you don't need to breach that company. Those are like the hardest decisions, but also are the places that if you're right,
you can create more value.
You can create the most value, and that and when this happens, sometimes we've been like, okay, the market's still not seeing this. We believe that it's gonna happen at some point. Let's double down. It's scary, but like that's where good investors.
Yeah, where the alpha is.
Yeah.
How do you make those like the early investment decisions if the market doesn't see it? If there's like obviously if there's not consensus, like there won't be consensus within the partners, maybe.
That's a good point. Yeah.
No, how and if there's consensus between all of the partners, then the market already knows, or the upside is not so big because then if everyone is saying it, then everyone wants to invest in it. No?
Maybe it's a good company, but if you are paying 2 times the valuation, it's not a good financial opportunity.
Yeah, it's so interesting. I would say that whenever we all agree, we get a little nervous. You know what I mean? Because it's like, we get a little nervous, or we're not nervous because probably like the company is like the valuation is crazy. So, I think it's like consensus is not, it's not good like internally.
Yeah, that's so counterintuitive.
Yeah. So, and then I think the way you solve for this, which it's easier said than done, is just working on like the trust. I think like trust is so important. Such an important thing in a venture capital firm, like trusting your partners, and sometimes be able to say, okay, I don't see what you're seeing, but I know, I know you've spent more time with this company, you know more about this sector, and I trust you. I trust your judgment, and and that's the way that within a firm like contrarian the contrarian investments can be made, but it feels very scary at the moment,
Yeah, I think it's so hard because like I think there's always like incentives to like if you want to invest in a company but everyone is against it, your incentive is bigger to not invest in it than to follow through, because if you invest in it and then it's a failure, then it's like, no, we all told you.
Yeah.
True.
So it's so hard.
Hard.
And regarding being contrarian as a venture capital firm, does that mean that when you invest in a company, normally that company is not being seen by every VC, or most of the VCs have already rejected them?
It can be both things. Honestly, it feels more scary when LVCs have passed on a company. Because at the end, like it's an industry that is like there's a lot of like groupthink, and it always feels better to invest in a company that had 5 term sheets, and you were one of them, and they went with you. You feel like, again, to the point of like, if in the future it fails, you can always be like, well, everyone saw it the way I saw it. it's not, I mean, I wouldn't say NFX always invest in Contrarian, you know, but when we do, it's usually when we do better.
Yeah.
And sometimes it's not like Contrarian in the sense of like, people thought it was a super bad idea. Maybe people were like, well, it's okay, you know, but I don't see the big unlock. I have a very concrete example. So there's this company called Even App. I don't know if you guys are familiar with it. It's like legal AI startup. It's already like a unicorn after 3 years or something.
Wow.
And when we looked at it, like we let the seed of or pre-seed of that, like I think we were the first investors. When we looked at it, it was like, oh, actually, you know, like it makes sense from a first principles perspective. We didn't know like where to put it, like in a bucket of like thesis or something, but it was more like everything makes sense, you know, like what they're doing for their customers is very valuable, blah, 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 blah. And then 3 years later, they're always being quoted in this idea of like vertical AI. And so like the market in 3 years invented like a new term for it.
Wow.
And it became like the consensus of like, oh, actually, when you use AI applied to a vertical in this way, like it's very valuable. And now this playbook is being rolled out in many places. But when we invested, this was more like back to the basics of like what they're actually doing. Feels like right. But it was a company that it was not a hot company, you know, when we invested. I don't have the information of like how many VCs passed or not, but yeah. So that for me, those are my favorites.
Yeah.
Of like when you see something and you cannot even put a name on it, and then a few years after, the whole industry is like inventing playbooks and thesis for.
Yeah. And what are
that.
the things that you look for, like when you're investing in startups? Obviously, like for people that you don't know your thesis.
Yeah.
Or people that want to be invested by NFX.
Yeah. Just to remind everyone, like we invest at seed and pre-seed, so very early. So I think at those stages, I think, first thing that is very important is the team, obviously. So, I mean, we want to work with people that we feel like, can build and sell, you know, normally like that combination doesn't need to be like the all in one single person, but like the team can build and sell. Personally, I think this is not like a firm thing, but like I like people that have worked together in the past or that they know each other pretty well. I care a lot about like the dynamics between them. And then like the main thing that this is like, very shared among all of us is like speed.
Yeah.
It has always been important, I think lately, like the ability to be able to move fast, build fast, not overthink things. And we have like many ways to assess speed. Like I think we've gotten pretty good, like things that are a little bit counterintuitive and like very detailed. And we're like, okay, this shows speed or not. Another filter for me is like, I realize that the best companies that I've met and invested in, I always learn something new in those conversations. So it needs to be people that are looking at the future in a slightly different way and that help you see like angles about how going about things that you might not have thought about. So if I look backwards now, I've been like doing this for a while and I already can see patterns of like who have become like better and so on. And it was always like, oh, I remember those were particularly interesting conversations. They were not as much as like, I come here and I tell you the playbook that everyone is telling. So like this kind of like type of personality. And then on the business front, a lot of focus on like, what are you doing for the customer? And that is very like, it's very common to say, but I don't think everyone gets so deep in understanding what are actually doing for the customer and like where is in their priority list. I always like to say, I want people solving problems that their customer like schedules meetings with them on a Monday and not a Thursday. You know, it's kind of like Monday problems, you know, of like, that's literally like on the top 1 to 2 priorities of like the people that they're selling to. And then you can normally like rank, like at the end, like there are a few categories. I think like help people make more money is always usually the top category. Productivity is below that, you know, saving time is below that. So really being like, are you doing something very, very important? And then like, if there's a product, we like to see it and test it. Sometimes we invest pre-product. It's not that common, but we do it. And then like the other thing is network effects is our thing. Doesn't mean that all the companies that we invest in have to have network effects, but we care a lot about like what's your theory of like how can you defend yourself, build a moat over time. If it's through network effects, we like it more.
What's network effects?
Yeah, so network effects is this. By the way, NFX, like the name, comes from network effects. It's kind of short for network effects. It's not that obvious sometimes.
I like it.
But it's this phenomenon by which like a product gets better as more people uses this product. There are many types of network effects, and actually we've written a lot about those types, and you can find that on our website. But at the end of the day, it's like a self-compounding mode that like the more and the biggest example are, for example, social networks, right? Like a Facebook is very defensible because the more users Facebook have, the more valuable it is for every user that is there, because basically everyone is there. So it removes the willingness to go somewhere else, right?
Yeah.
And the product gets better and better. So those are the most powerful ones. There are other types of defensibility, like embedding is one. Many other types, but we like to see that. And then what else? I mean, and these days with AI, honestly, like a big question for us is always like, who are the incumbents on this market? And like, is their distribution important? Like, is the fact that they have distribution like gonna block you from like entering this market? Like, can they build the AI product before you come or not? You know?
Yeah.
And then also like, will ChatGPT do it? It's also that you always have to ask yourself.
Hard to know.
Yeah.
And why NFX focused on network effects? Like, is the only fund that comes to my mind when I think about network effects. Why was that?
Good question. I think like network effects are important to a lot of VCs because it's such a critical thing. But I think NFX was started by three people that are now like, well, my partners, and they all had exposure to network effects in one way or the other. They all had built businesses with very strong network effects and had been like the power that this has and had learned a lot about the dynamics of how to build them. And then they went and studied, like the biggest companies in the world. And they concluded like, wow, 80% of them or 80% of the value created in tech comes from network effects. And that's literally like the only way to build like really, really big companies. So they really became experts at it. And I would say nowadays they're like probably the most knowledgeable people in the world about how to spot them, how to nurture them. And that's how the firm came about. Like also like the firm when it started was very focused on marketplaces, which by definition have network effects.
Yeah, absolutely.
Now, like as we grew and add more funds and bigger funds, marketplaces is just one thing that we do, and we do many more others. But that was the genesis.
I heard the CEO of NVIDIA saying that the mode of NVIDIA right now is its network effects, which is like, it's not, the users, it's the providers, the suppliers, like all of the network that they built, surrounding the company. This is so interesting. Yeah, and it's absolutely super valuable. I think we are seeing it as well.
Yeah.
I have one question about how does a top tier VC as NFX competing in San Francisco, that it's where all the best funds are. How do they do, or how you do in order to get the best entrepreneurs in front of you?
Yeah, that's the question we ask ourselves every day. That's literally the most important question. I think our job is it's weird because you spend a lot of time of people just pitching you, but there are times in which you suddenly have to pitch people. You know what I mean?
Yeah.
Like many times. And you always have to be thinking like I'm seeing and I'm having access to the best founders. We actually like do a lot of analysis every quarter of like, okay, which rounds have happened from like VCs that we respect, and how many of those we had a chance to invest. If we missed them, how we could have seen them, you know? So a lot of it is like making sure that you're seeing the right people. And I think network matters a lot, of like we have, I mean, a lot of our deal flow is basically people introducing people to us.
Who are they normally? Founders you have invested in?
Founders we've invested in, other angel, like people that maybe come a little earlier than us, industry people that are maybe working, at OpenAI, and they have access to. The hardest part about this is that it changes often. You know what I mean?
Yeah.
It's like now, this is kind of like the new trend. So these people are having like very...
Yeah, maybe 10 years ago, the like one guy in Intel was the one seeing all the cool startups, and now is the head of startups at OpenAI.
Exactly. But that is one part of like winning, I guess. Of there are others. Like I think like having a clear strategy, like having a good brand. Like we invest a lot on our brand. Like content is one of the ways we do that. So we put a lot of effort in like giving to the community, share a lot of our thoughts.
I've been reading your guides for a long time, and they're really good.
Thanks. But yeah, that's one way, of like give before you get, like give before you take. So we try to share. Honestly, for us, like the goal is that whenever we're meeting a founder, hopefully the founder already knows a lot about us. So then it's like a way to also like build a relationship in a more meaningful way and in a faster way. And also be very clear about the things we can do and we cannot do and what are we going after. Like at the end, like you don't need to do everything. You just need to do a few things well,
Exactly.
But it's a very competitive.
It feels like that. Yeah. When you are a founder or you're starting as an entrepreneur, it feels like, it's so hard to raise money. Yeah. And obviously it is. But then you are a VC and it's like, wow, there are so many funds. There's so much money. Yeah. Like, it's so hard to invest in companies.
Yeah.
That it's
like you can find a lot of companies where you can invest, but in the end, as it's a sector where you want to invest in the best ones, because they are the ones that can give you the 1000x returns, probably those are the ones that have more eyeballs and you need to compete.
Yeah, honestly, something I try to tell myself every day is like, okay, every year in SF, there are probably just 20 companies that matter. You know what I mean?
Wow.
It's like...
Only 20.
Yeah. I mean, maybe, I don't know. Maybe there's more, but I say 20 to myself. But yeah, I mean, honestly, maybe it's just 20 because think about like how many businesses really get very, very big,
Yeah, no.
Maybe it's even smaller the number than 20. I say 20 because I feel like if I tell myself 3, then I might pass out.
Yeah.
But it's like... That's a good filter because that's how it works, And then I would say like at seed, it's even harder. Like it's an even harder job to do that because I think when you're investing at Series A, Series B, like the funnel already, the funnel is already is much smaller. There's much more information. Like,
but there's also a lot of more competition.
That's true.
Because everyone can see now that Lovable is growing really fast. But, like if you were going to invest in them, like when they didn't have a product, that's different.
Yeah, absolutely.
That's like, because everyone can see that it's a good company, now everyone wants to invest, and so it's so hard.
It's a different game. Yeah, ours is a volume game in a way, volume and being able to see something special out of like a lot of volume. The other is more like,
I have a question, like in a city where VC is that competitive, do VCs normally share deals with other VCs? Are they collaborative? I mean, like the top VCs that lead deals. Because in the case of Spain, I guess that the competition is lower and even the best VCs that usually lead rounds usually share deals with other VCs.
And when you say share, is like inviting them to the round?
No, before. Like, hey, I'm seeing this company or this founder that is super interesting.
Yeah.
Do you want an intro?
Yeah. I think here is that one. No. You only do it, to be honest, like you only do it either with people you can co-invest, which when you lead, normally it's not that many. Like it can be like angels, like these people that also might send deals to you, like you. Yeah. And maybe like if you think, oh, this person knows a lot about this and I think can be helpful to the founder, like you share more from the perspective of like, I want to put together like a good cap table for this fund. But honestly, if I'm diligencing a company, I'm probably not going to share with other funds. that has the same strategy.
I've seen as an analyst some years ago that like 1%, like I don't know, 30% of the time of an analyst was speaking with other VCs in order to get deal flow. Like, hey, what are you looking at? What do you like? And you as analysts share your companies, your deal flow, and the other analysts do the same.
Yeah, I would say that's still a case. That's still a case, but I think it's because there are a lot of VCs that maybe they don't lead.
Yeah.
You know, maybe they just participate in rounds or, you know, or co-lead.
Yeah, you can call it normally.
Yeah, I think like the only time I personally do it is when it's like something that specific that I'm like actually having this fund on board or this person on board could increase the pie. Or sometimes with like close VC friends of mine, we also share things that we pass on. And like I used to think like when I started in VC, I used to think this was dumb because it's like, are we just sharing like the things that we don't, you know, we decided not to invest. But then like, since I realized that this is like an imperfect game. Because sometimes it can happen. You within a firm can be very excited about an opportunity, but like it doesn't get approved. Because, you know, like whatever dynamics.
Or
and
maybe you invested in a competitor.
Yeah, normally these are like the only things that I share with people. Because first, I'm not going to share things that I don't have trust in. But then there's certain things that I might say, hey, we didn't get, you know, we kind of liked it. We didn't get like full conviction, but maybe you should take a look. Because maybe it's interesting. And sometimes I've done this and these companies have worked well. You know? But yeah.
Makes sense.
But it's a little... And then like, obviously you're very collaborative with other VCs that are after you.
You
know, that's normally like when your companies go out to raise, then you share with the people that can do those other rounds and people that are earlier than me share with me.
Yeah, so a company that invests in Series A wants to be friend of the best seed and pre-seed investors.
Exactly, yeah.
But when you're a pre-seed investors, you're the first one, no? So you need to do like your own stuff.
It's a little bit,
You can rely on angels maybe.
Yeah, I think, I try to spend more time with founders than other VCs. Because it's always like, okay, I can spend like an hour with another VC or like I can meet two founders in the meantime, you know what I mean?
And what's your exit strategy? How does that work? Because I hear it's obviously one of the hardest part of the job as a VC because investing is easy, but selling, it's different, no? Like
Yeah, I mean, for us, we always try to go for IP, you know, like IPO, when we invest is IPO. Also, we're in the US, which is like the biggest market for that. It's been a little like the last few years, like it's been like, I mean, the trend is like bigger and bigger rounds and companies staying public for longer and like funds having to exit sometimes earlier than IPO, like on a very late round. Acquisitions has been another way. We've gotten a few companies acquired by big amounts, although like it's also been like a little hard the last few years. But yeah, normally those are like the two main. I mean, yeah, we usually also like the thing is like if you have our strategy, which is like being one of the biggest investors of a company, it limits a little bit like the options you have for exiting. You know, like it needs to be like a really home run. Because you cannot just like sell your stock. Like you can kill the company. Like if suddenly like the main investor is like, I'm just gonna like, you know, sell this.
It can feel like a sign of not having conviction.
So we're usually like, you know, in for the long term. And yeah, that's how it works.
That's very interesting.
Yeah. Any advice you can give to a person that wants to break into VC?
Yeah, actually, I mean, I get this question a lot. I get requests from people that want to get into VC often, and my biggest advice is like, start doing the job even if you are not employed by a VC, because at the end, you can all the things that a VC does can be done except from like actually deploying the money. But you can be meeting companies. You can be like trying to form an opinion on whether you would invest or not if you had money, you know? And also, try to like operate as you can add value to the founders as well. So try to operate as that was the case, as you were doing. And then also like use that work that you're doing to like build relationships with funds and show the sort of companies that you have access to, like the way you think. Yeah, I mean, actually, in my case, I just spent like between like leaving my company and joining NFX, maybe it was like a period of 3 months in which I was like, it came naturally to me. It was not part of a strategy as I was describing, but I was like, oh, now that I have time, I'm gonna spend time with founders and just like try to like advise and, you know, and through that, I also realized whether I liked it or not, because that's another thing. Like, I think VC looks very shining from the outside. And then, like, I think for some people, it can be like a very miserable job. So it's so risky for a VC fund to hire someone that has never been exposed to what it actually is.
Yeah. Why do you think it can be miserable for some people?
Because I think it's not for everyone to be like meeting so many people all the time. You know, like the context switching, the like having to make decisions very fast and like learn about that many different things at once. And then also like I mean, you have to, I think like you have to listen a lot and not talk that much.
Yeah.
So like, a lot of people are like, I want to be the protagonist of everything, you know, and suddenly you're sitting there like, and people are telling their story.
Yeah.
And then you also you invest and you don't have control over like this, you know.
Yeah.
So I have friends that have spent time in VC and have concluded like, this is not for me. And then I have friends that love it, you know.
Maybe they prefer to be founders.
Yeah, maybe.
It's more like you're the main character.
Or they want to build companies because it's more tangible, you know.
Yeah.
And they can see like their impact, like the feedback loop is shorter.
Yeah, that's true.
Yeah. I honestly think it's not for everyone. And then like the social interactions, I mean, especially at Seed, some people are like
all the time, full time.
Yeah, I mean, I have friends that told me like, I think I would not be able to do your job, you know, because I just get tired of like speaking to so many people, or why lose interest, you know? Like,
I think you need to be very curious and always be wanting to learning more, no?
Yeah. So I think that my advice is like, try to do it because it's gonna help you know if you are actually, if it's actually what you want to do, and it also gonna start creating something that you can offer like the fund that eventually will employ you, you know?
Great.
For me, it's so exciting, you know, like it's all the time learning new stuff, and it's like the new coolest, you know, product or feature and whatever. And like this crazy guy in this place that was able to do this or that.
Yeah.
Then you can see that for many VCs, it's usually their last job.
Yeah. I mean, but you too are people that have a newsletter, you know?
Yeah.
Like you generally, I don't know what was first, like the newsletter or the VC job, but
the VC job in my case.
Yeah. But I mean, not everyone can be running a newsletter. Like you need to be like a certain type of person in terms of like how curious you are and
you really want, like you need to like it.
Yeah, for sure. Yeah, like so many people ask me like, how do you find the ideas? And it's like, my problem is I have too many ideas. Like, I don't have time to write everything.
Yeah.
Well, so thank you very much, Anna.
Yeah, it was brilliant. I think this is like a class, you know, on VC, you know. So
VC 101.
Yeah,
VC 101.
Thank you so much for doing this. Like,
yeah, of course.
Like for me, it was like super like good to learn as well. So
thank you. No, I love talking about this. So yeah, anytime.
Yeah, we can feel that.
Yeah, cool.